sorry about that. So yeah, can everybody see the screen now? Should be able to. All right, awesome. Yeah. So anyways, 4-hour time frame is your monthly cycle. So what you're looking at on quarterly theory from the 4-hour chart, the dividers are dividing out the previous week for you. So week 1, week 2. So currently we're in week 3 of price action. We have a sequential SMT here at the highs, and that's been confirmed here as well. Let me get rid of this alert down here real quick. So we have the sequential SMT here at the highs between the previous week, between NASDAQ and ES. This is your higher time frame SSMT. So these are likely the ones that I tend to trust more often. But also if you drop down to your 1-hour chart, you see here for Tuesday's price, we did have this nice push down with some tweet news there, as I like to call it. But we did take off this low here at the weekly open, and then we bounced right back up after it. So we also have a weekly cycle set in. So what I typically like to watch going into these situations is how does the Asia session play out when we look at our daily cycle or our 15-minute time frame. So this is going to show you a 15-minute chart, but it's splitting out 4 quarters. So each of these quarters represents 6 hours of price action. So if you were to just look at your 6-hour candles, that's basically what it's showing, only in a smaller time frame chart. So what I'm watching for basically is how do we react to this high up here? Do we create a sequential SMT here to drop us back lower, or do we just continue to blast through it, and then we'll see perhaps a high put in London or a low put in London. So that's what I'm watching for in indices, mainly because if we were truly very bullish coming off of this previous day low that we tagged over here, then here at the open we would have just saw this springboard off and really just take off from here once it hit the TCISD and just rip higher. But we're not really seeing that yet, so a little bit of indecision here, I think, with the ceasefire being called off, bombings being called for, things like that. So that's what I'm looking for there. Just waiting on the 15-minute chart to see what SMT we get put in. Gauge from there. And someone asked here, do I always need an FEG for the model? No, you do not. Now, obviously, if you've been following Sniper, which is who I trained under, you'll know his model trades from IRL to ERL. So, for example, out of this 1-hour gap, as soon as we hit a low in there, we have a sequential SMT. He'll trade away from that to take ERL. I don't always wait for that. I'll trade ERL back into IRL as well. But I do use gaps and highs and lows to gauge market narrative. So if price is going from internal range liquidity to an external range. So let's look at an example of that here on ES. If you'll notice that when we did put in this weekly cycle, we left pretty much relative equal lows here. The low is at 85.25 and 85, so by 1 tick. And we also have this fair value gap sitting right here. So in all reality, even though we did create this weekly cycle here, I'm kind of wondering if we won't just instead create a daily cycle up here at the 6-hour high and then come right back down for these equal lows in the fair value gap. Just kind of my assumption right now, but again, I'll wait to see what we do with that daily cycle. But then once we hit this fair value gap, then I'm looking for continuation long out of that perhaps. So it just depends. Let me look at gold real quick too. A couple things I'm watching for here because I am bearish on gold. Called this trade out earlier. I've got a breakdown coming out on this later on as well. You'll see it on YouTube later. But why I was bearish going into gold on Tuesday's price. Was because of this right here when we created this weekly cycle here. So anytime that we create a weekly cycle, the next thing I'm looking for as we move on out of that session. I'm looking for the confirmation, which we got here at the 9 p.m. candle on gold. But I'm also watching for the next lower time cycle, which from this would be our daily cycle. So 1 hour time frame, weekly chart, right, that we're looking at broken down on 1 hour candles by days. And if we drop down to our daily cycle, what happened in the New York AM, we created daily sequential SMT here with the London highs. And this is the short that I took today out of gold, targeting down to previous day low. Played out pretty nice for about 3R. So anytime that we have these stacked cycles here like this, basically you're catching the continuation of it. So it's a really nice higher probability trade that just rips down to the draw. And of course, previous day low was open here on gold. I believe silver, yeah, silver had already taken its draw of previous day low, but then just continued to dump after that. Sequential SMT you see right there. How do you blend market maker models with QT? So basically when you see that sequential SMT, right, in effect those are your market maker models, right? So let's see here. Let me find a good example here. So obviously here, if I look at the daily chart on gold, this big pink box here is the weekly gap. So that's where I've been watching price, and you'll see here we have the buy side of the curve coming back into IRL, right? So we came up, we've come back down, we've taken out ERL. What did we do? We retraced back to the gap, right? So here's your IRL. We're heading now out of the IRL. And so your market maker model, when you drop down a time frame here, here's your buy side of the curve coming back into the internal range. So this is now starting your sell side of the curve back down, targeting this low here. Now whether or not we get there, that's another story. We've got a lot of news, a lot of uncertainty in the market. There's also a lot of strength with the dollar right now. So typically gold is considered your safe haven asset, but right now there's more strength in dollar. A lot of people are just buying that instead of gold, so or trading that over gold. So that's why you're seeing some consolidation in here as well, right in there. But back to the market maker model, out of this gap here, if you were to look at your 6 hour candles, let me get silver pulled up here as well. What I want you to look at here is your consolidation right here, right? So this candle consolidated here inside this one. And if we mark out the same candle over here on gold, I'm going to put this in blue. You'll notice this candle is green for bullish, up close candle, down close candle, so you have a PSP here as well. The high gets souped out right here, and then displacement down. So this is your C2, followed by C3, C4, so on and so forth. So your market maker model, right, sweeps out this high inside of where? Weekly gap, inside of the daily gap. That's right here as well. And then the target is down here, these are relative equal lows. So this would be your like original consolidation down in here. If you look at 1 hour time frame. So this right here would be your original consolidation. Buy side of the curve, eventually taking out the highs here. Now you're in the sell side of the curve. targeting these relative equal lows down here. So hopefully that helps to answer your question how you form the market maker models. And where it is, here it is. Buy side of the curve, now over to the sell side. So I also look for precision candles like this, or TPD. Yeah, so same thing, right? So if you look at, I'll show you this here on the 6-hour time frame and what that looks like on the 15-minute over here as well. Let me clear out all these drawings real quick. So if we were to come back to this point here, right? So this would have been your original consolidation right in here, right? These lows, or your target for the day, right? So you have buy side of the curve here, switching into sell side of the curve. So while you could look at price through all these market maker models, I find that that really just tends to confuse most people, because if you look at just like a diagram of a market maker model, they often tend to be very confusing, right? Because you'll have like your original consolidation here, then you'll have price run higher, reaccumulate, then you'll form some sort of smart money reversal here, right? And then price will come back, tag that in, right? That's your low risk buy up here. Wherever you line up over here, right, will be redistribution, and then finally all the way down to the original consolidation lows, right? So it doesn't always look picture perfect like that on a candlestick chart. So what I like to do instead is just mark out the quarters, right? So I have my quarterly dividers on here, and it's much easier to tell what's going on in all these time frames, right? So you have your original consolidation here, or your target. Price comes up, creates a false move here, so it's reaccumulating here before distributing, reaccumulating, distributing, finally takes out these equal highs right here, and then reverses. Creates that sequential SMT here as a weekly cycle, distributes down. Where does that go to? That first area that it reaccumulated, right? We get this daily cycle in here, and then we distribute further. Until we finally take out those lows there. So that was the overall target for the day. Now, of course, some news sent it much lower and everything, but if you look at silver, same thing. We took out these lows over here. So for me, what I like to watch for is basically, if you look at this from a daily perspective, right? So now we have each day as a quarter. An easy way to judge this is any time that you have manipulation here in this zone, from 0 to 1.5 standard deviations from quarter one. So you can clearly see quarter one here, just accumulated price. Didn't take out any high. Did take out these lows, but it didn't take out the high. So it's accumulating right in here in the defining range portion. And once we take this out in either Q2 or Q3, so Wednesday, if that sequential SMT lines up inside 0 to 1.5 of the defining range, it's very high probability. If it happens during a news event, even higher probability. that's going to reverse. That'll be your high of the week, and then you'll target whatever sell side liquidity you have down here, which in this case is these relative equal lows here from the prior week. These lows here. So what's the best time frame for intraday? For me, it depends on the asset, but if I'm watching indices, I like to watch the 15-minute time frame, which is your daily cycle. Once a daily cycle gets put in, whether it's London taking out Asia lows, do we get a continuation of that in New York AM? That's what I'm watching for. Once we get that daily cycle, as long as we're far enough away from that daily cycle, I'll take a 90-minute or a 5-minute short or long away from that area, if that makes sense. So let me jump out of replay mode here so you can see this. So same concept here on this hourly chart, right? Once we put in this weekly cycle right here, then I'm fine with dropping down another time frame, looking for a daily cycle, whether it be in London taking out the Asia high or New York taking out the London high. Once it does that on the next time frame lower, that's generally my trade for the day, right? So imagine this as the daily cycle, right? I would drop down to the 5-minute time frame to see the 90-minute cycle. I would just repeat that process. So what I'm looking at here from the weekly cycle, if this is where price is right now, is there much chance that we're going to ride up another 40 points to take out these highs? No, that's not going to happen. If we did that, then likely we would lose this sequential SMT here, right? And then I have no trade. So I'm expecting this to be the high of my session right here. Does that make sense? And same applies for, let's say this was Asia high, right? And we did this, and then coming in here to New York AM, I take out London high. It's the same principle. This is where I'm looking to get my trade right here, because I'm expecting price not to come all the way back up here. Let me jump on indices and try to find an example here recently. Yeah, let's go here. So let's take this as an example, right? So this is Tuesday, April 14th on indices. So how do I navigate price here in the index futures? If we have a sequential SMT put in here, right? Not only do we have a two-stage now, right? So we have two, London taking out Asia's low over here. You can also see Asia accumulated. So what did we say before, right? If we have that sequential SMT occur in the 0 to 1.5 area, we already know that we're in a bullish trend. Now I'm having a bullish sequential SMT inside that zone. Likely London expands. That's what London did. So what do I want to see going into New York? I want to see New York continue that expansion. Because at this point we still had all-time highs to take out. If I look at YM took London low, right? So if I'm looking at this right here, what would I want to see coming into the New York AM session at 9:30? Does it make much sense that price now from here would reverse all the way back down to take out this sequential SMT, almost 100 points lower? No, that doesn't make any sense. For it to come all the way back down here, remanipulate, and then take half higher. If it did that, then likely what you'll see for the rest of the session is just chop, right? And you'll see a seek and destroy pattern after that. So what I'd much rather see is this daily cycle low hold and a 90-minute form out of this. And for that, I wait till 9 o'clock. And why 9 o'clock? Because 9 o'clock is quarter 3 of Q3 on the daily cycle, right? So you have stacked cycles. So all I'm waiting for here is this low here in Q2 to be taken, right? On whatever asset. Once that occurs here, that's my trade. Because I don't want price to come all the way back down, right? To these London lows down here, right? So this is your London low right down here. Because if price comes all the way back down here, from here, right, where we've expanded away, then that likely means we're not going to be bullish for the rest of the day, or we're really going to chop around. It's going to be very poor delivery. Hopefully that makes sense. So that's kind of how I'm looking at price through the day. How did London react to Asia? How should New York react to London? Do you require a two-stage for each trade? No, I do not. Mainly what I'm looking for, and I'll tell you why I'm looking for this, I'm looking for this area right here in quarter 1 to be manipulated most often. That's pretty much my only requirement on the day, is the defining range to get manipulated on whichever cycle I'm trading. So whether that be this 90-minute cycle that got put in, or if we even fractalize this down to the 1 minute and microcycle, I'm looking for this defining range in this quarter, this first quarter, to get manipulated. And you'll see that happened right here. Which indicator has the defining range? I use this one here. This one, CDKA quarterly theory. Has down here, so you can kind of look through some of the settings here I have. Has a defining range here. I've just enabled all of them and put on the last 5 cycles of history. But this is the indicator name. I'll drop a link to it here in the chat real quick. I think I can do that somehow. I'll find it for you in a minute. I'll drop it in for you. But my model, the Chronos Precision Protocol, if you've watched the video on YouTube, my model is manipulating this defining range here, the last 2/3 of quarter 1, in line with my bias. So I have a bullish bias, so here's the bullish sequential SMT. As soon as we get closure over the low that took this, would be right here. You'll see that also lines up with the 5 minute. Stop would go at the low. Now, of course, this wicked it out one last time because you're 90 minutes, so you have to watch that. As soon as that happens, this crazy amount of R that you would have gotten on the day if you were to trade that. But I also like not to trade the one that, in this case, manipulated lower, right? I want to trade the one that failed to manipulate. So in this case, ES. Which candle was it? This one. So as soon as we closed over, we never even come back to tag it, and price just launches. And you can see how far this goes on the day. However long you wanted to hold it, what your risk is, it's up to you, but 7R, whatever. So you can just see how explosive that can get from a microcycle. Now I don't prefer to take the microcycles just because it's really easy to get lost in price and what's going on in the higher time frame, but if you understand all that, can trade everything like that, then definitely can be very, very profitable. One thing that I do, though, if I am trading the microcycle, is my stop won't go at the current quarter's low. I'll always put it at the low that was manipulated in the previous quarter. So for example, I won't put it at this low, right? I'll put it at this low over here, because that was the low that got manipulated on the other asset, if that makes sense. So that's kind of how I trade those. Another way that you can trade these is not to take the TCISD candle, right? So over here, the TCISD candle was this one, I believe. Yeah. You could wait for a inverse fair value gap over here as well. So if you have that, that could be your confirmation. So such as this one here. Once that gap got closed through right there, next candle tags and rips higher. I do prefer an inverse fair value gap to be up higher, right? For example, like this one over here. And then trade away from that. But sorry, not this one over here. And once we fill that over, then take the trade. But here lately, 1 minute's just been ripping on indices, so it's kind of hard to get in on the microcycles, but they definitely work very well. You could also fractalize this into other time frames, 3 minute, 2 minute, whatever you want to look at, to see if one of those has a IFVG on it, and then you could trade from that and take that as your entry too. So you don't have to enter on the 1 minute specifically. But that's how I look at price in the morning. As long as we have that daily cycle set in from London to Asia, or if we've already done it in New York, do we have a possibility to manipulate those lows, or have we traded far enough away to where that's not likely? Then I'm looking and dropping down to the next lower cycle to catch a continuation. So back to why I want to wait, right, for this to get manipulated, the defining range. If you follow GXT, you'll know that their 3 candle pattern, right, candle 1, candle 2 manipulates the low, creates a C2 closure, and then you trade C3. That will basically give you your classic AMD, or accumulation, manipulation, distribution, or your GXT model, right? So basically the same thing, just looking at it from a quarterly theory perspective. So how do you form your narrative coming into the day, let's say early in the morning before 9 a.m.? Yeah, so great question. So let's look at today as an example. So my first thing that I always do is I start off on the daily chart, right? Where are we at in price? Keeping in mind any higher time frame narrative, right? So for example, this month right now, where did we come from? We're coming from this monthly fair value gap down here, right? It's clear that we've been heading towards all-time highs. We still got about a week left in this particular candle. We have met the draw, right? These all-time highs up here, but I can see us moving higher from here over time as long as things continue to play out. So keeping that in mind, what could I expect on indices, right? Well, if we look at Monday here and Tuesday, what's already happened, right? Tuesdays come up and take Monday's high, right? So just like T-Trades would do for his fractal model, right? We've taken the previous day high and we close back in the range, right? Done the same thing on ES. We've come up, taken prior day high, close back in the range. I'll look at YM. Taken previous day high, close back in the range, right? So already, just from a mechanical standpoint, I've got a bearish bias coming into Wednesday. Next thing I would do is drop down to my 1 hour time frame to look at the weekly cycle. Overnight, right, so starting from here, overnight coming into the next morning, did we put in a weekly cycle? Are we already trading away from a weekly cycle, right? So that's the next thing I'm looking for. Do we have the potential to create one at the New York AM session? If not, then I'm dropping down to my daily cycle, right? We're too far away from previous day high or low. Then I'm dropping down to the 15-minute chart. Are we close enough to London, high or low, right? Because the New York AM, I'm reacting off of London's price action. So as an example here, if we just look at this previous day here, let me back up to 9:15. So if I were just to look at this right here, right? We have no sequential SMT at Asia low. We've just traded away from there. All three assets, right, have traded above London's high, right? Set in quarter two. Here's quarter two. We've traded above. If we look at ES, same thing. Next thing that I notice is where are we at in price on the defining range, right? Well, you can already tell here's 2 to 2.5 standard deviations. This is likely the area where you'll see retracement from. If we look at YM, and I believe this candle was some earnings that came out. Where did that send us to? 2 to 2.5. So already an area that I can look for retracement. So knowing that, we're looking for some retracement here. So that's why this morning I was looking for price to come down and manipulate at least London lows. Where are we at on NASDAQ? Well, we're very close to those London lows. So I'm not going to drop down to a 90-minute time frame or 5-minute chart from here, right? Because that's only going to get me stopped out, right? Because we've already taken this low, right? And I know some guys that took this trade this morning, right? We have a sequential SMT here. Why won't I take this? We took liquidity. Why won't I take this long? Well, number one, even if it does confirm, right? Which it does right here, right? It's a sequential SMT. It just took liquidity. It's in the 0 to 1.5 in the defining range. But if we zoom out a time frame, where are we at? We're just a few points away from London low. So why would I long here when London low is there to manipulate? So I want to wait till London low gets manipulated, or at least we trade away far enough from it to where that's not likely to happen, right? Very next few candles, that's exactly what happens at the 9:30 open. We manipulate the London lows. Now we have a daily cycle sequential SMT here. And if you look at YM, it skyrockets off of this. But of course, we know later in the day, it came back against us. So I know a lot of people that took longs off of that 5-minute and 90-minute cycle there, got stopped out right at the open. And then I also tried to long this daily cycle because of this huge bullish push that we got here. So if we back up a little bit, this did look really good for longs here. I know a lot of people took this. Matt took it in the Forever Trading Circle, Sniper, some other people. Because currently as it sits, right, you're manipulating this defining range over here. You're pushing away. You've confirmed a change in state of delivery on all three assets. You have a PSP here as well. So this did look pretty promising. Just didn't work out. Yeah, took the short weekly SMT at the highs. Yeah. overall, that was the play. If we look at the 4-hour chart here, and this is something I explained in the trade recap that I'm going to post on YouTube later. But if you notice here, ES failed to take previous week high right here. And when this candle closed, if I fast forward another candle, right? So you have bearish close candle. So same thing I do on the higher time frame, right? The daily. We took the high here, closed back in the range. What can we expect for the next candle? To take the low. Same thing. Took the high, closed back in the range. What can we expect for the next candle? The C2 closure, C3 expansion. If you look at YM, 4-hour PSP, bullish close candle versus down close candle. Took the high, but because we have the PSP, we've got the sequential SMT. There's a 90-minute sequential SMT in here as well. C3 expansion. Drop down to the 5-minute here, so the 90-minute cycle. There it is. How did we trade this? Let me get rid of this here. And of course, this is also in the 2 to 2.5 area that we want to see retracement at. What do we get? Retracement back into the range. I'm just going to get rid of that for now. But this goes to show why I watch this defining range here. So if you watch this candle, right? All it did was accumulate in there. When we take out this high, created a sequential SMT. Same thing over here. Defining range, sequential SMT. If you look at this on the 4-hour time frame or even 6-hour, well, let's just look at it at 90 real quick. You'll see. So here's your sequential SMT on the lower that we saw, right? Here. So what did this first candle do? Accumulated price. Closure below. So we took the high, closed back below. What can we expect the next candle to do? Distribute down. Distribute down. So basically your GXT model right here. Only spelled out in quarterly theory. So that's why I built my model around Q1 defining range being manipulated as well in that 0 to 1.5. It's kind of like a mechanical way to define GXT and where manipulation should occur at. But yeah, at this point right now though, we have this monthly cycle, right? So SMT between previous week. But if you look down here in the 1-hour chart, we also have that daily cycle here as well. So a little bit trapped right here till the market picks a side. More so, I would be leaning towards the shorts because ES over here left some pretty relative equal lows. So there we go, right here. So even though there's a weekly cycle here with confirmation, I would almost expect price to come back down for these equal lows pretty soon. And we never did tag any fair value gaps down lower either, so I would expect price really to push down, reacting off of that monthly cycle there. Do I always wait for the post 9:30 manipulation? I originally was taking the M&Q short, but it didn't come up to the daily TCISD. It left without me, I didn't want to chase it. Yeah. So do I always wait for the post 9:30 manipulation? The weekly TCISD. No, I don't. I'll take a trade anywhere from 9 a.m. to 10:30. That's my window that I like to trade. That's quarter 3. So if I already have manipulation prior, right? So like that other trade that I showed from last week, Tuesday, if we already had that daily cycle, so what am I watching for next? I'm watching for the 90-minute. If that forms before the 9:30 open, I already know the 9:30 is going to be distribution. Just because we've already manipulated prior to a driver, so that driver should be distribution. But yeah, you don't want to chase price necessarily, as you mentioned there. So what I'm going to do is jump out and look at gold real quick, because I'm looking for shorts on gold. We have gotten our daily cycle here. Candle to get this one. Look at platinum as well. Platinum's just now there. So all I'm waiting for now is if we can drop back down and get closure below this low. See if we can catch a short back down in the range here. Here in the Asia session. If gold comes up and takes this previous quarter high, then London will likely provide a better move. Let's see here. No 90-minute S&T either. Oh, no, we did get one there. No. Okay. Where's platinum? It's already traded above as well. So just to sit and wait, see what price does here if we want to take the PM high over here, quarter 4 from the prior day, or if we start to move down from here. Ideally, I would also like to see this get inversed too. It's a little bit extra confirmation, but doesn't have to. This would be plenty of confirmation to short back down. And what's indices doing now? This is that hourly or weekly cycle, TCISD. It's this one here. It's marked out. But again, I got marked out here this PM high, so we'll see what happens there. Because if we are bearish, then likely we react off of this high here and move back into the range. Whether it be a daily cycle or a 90-minute here above this. Because that also puts us inside the large fair value gap on the hourly chart as well. If we fail to manipulate here, then likely we'll see price continue higher just a little bit more. Maybe London manipulates Asia, so we'll see what happens there. But really, it's a lot of reacting to price. You don't always have to predict what happens. Just simply try to identify and spot where the manipulation was put in. A very easy mechanical way to do that is with my model. Just looking at the defining range, right? And did we get a sequential SMT in the 0 to 1.5 of that range? Do we create the TCISD, take an entry there, write it out for 2R? It's pretty simple. Like I said, yes, we did get this weekly cycle here, but we also left relative equal lows. So I don't necessarily trust this. And especially so because YM failed. And generally when you have a stronger asset like NQ and YM plays the polar opposite and it's the weaker and it didn't create that sequential SMT, taking this low, then I'm a little bit hesitant to just long this blindly. And then on top of that, we also have relative equal lows here on ES, sitting right above a fair value gap on the daily. So before I really start to look for longs here, I want to see this continue to push down, get some of these fair value gaps here, at least this one. But we'll see how price plays out overnight. Yeah. Any other questions? Just make sure I didn't miss any here. Okay. Just a link for the indicator. Yeah. So let me drop that in the chat as well for you guys, and get that over to you as well. I'll probably put that actually. What I'll do is I'll put that in the channel. Would this be over here? I'll drop it in the Insights channel, and a couple of videos, screenshots as well of my settings that I have on my indicators. I use that CDKA indicator for the sequential SMT in the defining range, but I use this triad quarterly theory profiler for my quarter dividers. Yeah, don't worry, I was recording this as well, so hopefully it did record. My screen just glitched out there, but should be back on now. But yeah, I've got this recorded and I'll drop it on YouTube as well. It's a nice little Q&A later down the line. But alright, I'm going to jump off here. Appreciate you guys coming in for a little Q&A as well, and hopefully we'll get to do some more of these and answer some more of your questions. And I'll drop that indicator link in the chat and the videos of my own settings and what I've got on it. But yeah, if you've got any other questions, drop them in the chat there in the public chat if you can, and I'll get to them as I can and try to answer quite a bit as I can get to them. Appreciate you guys for tuning in, and I'll see you guys in the next one.